Okay, onwards we go to lesson 13. Now, okay, so yeah, got a good little archive building right now. Okay, so where are we? What happened? This is Sunday, 27th of October. I didn't really dip in and out of the market too much last week because I had the two positions running, and all I could really do is, number one, is give a running commentary throughout, which wouldn't give me too much content to provide for a video until I move on to the tools that we're going to go into next, and also a recap and exactly what happened with the price action on the setups that I did go over. Gold, GBP USD and GBP AUD. So we're currently looking at GBP AUD. However, I'm going to switch over to gold, start with a gold breakdown, and then I'm going to go into GU, and then we're going to switch things up a little bit and refine our tools a little bit more into the coming week, because I do suggest that there is going to be some big movement, especially on GA, and I do believe that gold. Remember, I did state with gold that we could be looking to come into. So remember when price was, where were we? We were around, I think we were around here somewhere, I believe, on the 4-hour time frame. And I said that the 1480, the weekly barrier, that right there, as long as we were above that and price remained above, it could dip into and, you know, maybe retest that area before actually springing higher. So as you can see here, we have the 1, 2, 3, 4, 5 spikes to the downside. We have the 3-pin formation here as well. We did dip below the 4-hour region across here temporarily, but we have found decent support. If we track and trace it back to the left hand side, 1, 2, 3, 4, 5, 6, 7, and we also have this in and out move coming off the 1480 handle. If we reflect that over to the hourly time frame, we had the barrier over here as well, which we did go in and mark on. We had the barrier on the hourly time frame, and then I did state that anywhere around here, worst case scenario, around 1480 with this risk reward tool, that we could be in for a huge move to the upside. And I was expecting this area to be taken out. So remember, we had retail stops short would have been above this area here as well, and just over here too. So if we look at the price, let's start with the left hand side. The 4-hourly, we dipped below, dipped back above, and then we retested 1, 2, 3, 4. We also had this mini wedge formation that was more or less forming, so I just simply put on the arrow tool there across the bodies. That's the fit there. 1, 2, boom. Then we had the breakout with the retest, the continuation. We had a double retest, more or less, not just with the lid, so to speak, of the pennant, but we also had a retest into the 4-hourly region. But again, it was early on in the week, and I did state that we could be looking at a false move into Monday, Tuesday, to trick traders more or less into going short breakout, if you will. And what we could see there is that market respected the thesis that I brought forward and also stayed above 1480, and it was quite straightforward that if you look at the daily time frame, if you look at the day, you know, even though we had this price drive and break below, again we knew that the weekly was very, very it was a very key area of value. If that price did remain above that, we are looking to go back to the upside, so let's not be fooled. What we can see though on the daily analysis going forward is that the metal, so I'm just translating this over to the right hand side as well, just getting a few ideas. We come back into the spiky region, which is 1515. I don't need to go and draw any key levels on 1515 right here to actually highlight where the rejections came from, but it's a decent area, psychological barrier, but it's more evident and clear what exactly happened there when I run over the intraday price action intra-week in a moment. So now with gold, if I look at the weekly closure, okay, so the week, look at this price action on the week. This is where we can get a lot of clues from and ideas as to where price can move going forward. If we look at 1490, okay, we have 1480, obviously with the horizontal line on there. We layered that quite some time ago, but 1490 as well. We can see that price it tried to dip below many times. 1, 2, 3, 4, 5, 6, 7. The fifth and sixth time did succeed at actually remaining below that area for 24 hours, but again the price pulled it back up. So what I'm looking at now is, even though that we had the week daily closure, the weekly has created this rounded bottom. We've rejected 1480, we've rejected 1490, and now upside is telling us that it's holding strength against the downside on a weekly time frame. We are above this area, we're back above 1500 as well, and what I'm looking at now is this area, the area in which gold rebounded from, right here, and again it'll make more sense as I go into the lower time frames. That is just more or less a temporary zone for profit taking, and we can see where it's happened here 1, 2, 3, 4, 5, 6 times. Markets came into it numerous times, especially from this rally. Okay, made up its mind, fallen back to 1480, tested that area, and we're just getting a repeat of pattern. But the weekly, many of us will see that daily candle and think that a complete reversal is in play, which it could be, but for me it's going to be short-lived. Maybe we can come back down to 1500 here, retest, and then actually start to move to the upside. So it's going to be interesting to see what happens here on gold in the following week, but I am bullish for sure, for certain. And if we go ahead and we can just more or less, we have another pennant taking place here, significant high, lower swing, now we've broken, and then over here as well, simply put, we have 1, 2, 3, so 0.12 across, false break, so we have three drives, we've held above 1480, so we're mixing just a standard simple technical pattern in there, and we also have the same scenario happening on the lower time frame there. So we're daily in the 4 hourly, breakout 1, breakout 2, so I'm looking for a retest, and then I'm looking for a huge reaction and rebound to the upside on gold. So looking at this on a higher perspective and higher time frame, what I'm more or less searching for here is, if I go for long position, we'll tune this up afterwards, but we could be looking at something similar to pullback, stops below this area, targets up into the highs, as you can see. So we have a 500 pip target on gold, 500 pip target. So with that being said, we can translate this over to the left-hand side in a moment, and we can get to grips with what is going to occur and also what happened last week. So that's just a very, very simple analysis. Again, as you can see, I'm not really drawing on too many tools or too many lines because I already have the foundations laid and the foundations set out, and now I'm just reading price. But here, as you can also see on this daily time frame, 1, 2, 3, 4, 5, 6, 7 wicks, and then we have boom, momentum has cleared all of those wicks on this one as well, and also taken 1500. So this dead momentum, as it's been waiting to make up its mind, and if you look over here on the right hand side, that is how it translated into a lower time frame. And then boom, we've made our mind up, we made our decision. So let's go over to this hourly time frame, the hourly or the 30 minutes. Great, we're going to get into the 30 minutes soon, guys, and we're going to be replacing the hourly and the 15. Simple plot twist, but it's going to really help us refine, because again, I just want to paint a picture going forward. I want to show you guys certain time frames, and I want to show you certain tools, and we might, the main thing is to actually start to shed skin and make our charts more simplified, and also allow our minds to only focus on the most powerful aspects of our toolbox, time frames, and again, to tighten up ship as we go along. So I'm just going to show you how the refinement more or less works, and you'll see the differences in the chart analysis and the hygiene of the chart yourself. So over here we can see this is the choppy consolidation range, where we had a lot of forceful down movement, forceful points of volume and liquidity just being forced from one end to the other, and again a lot of traps being laid out. Now last week, from the analysis that I put forward over on the left hand side, the daily and the 4 hourly, I did state that we could be in for a drive to the downside, and anywhere around here we could start to look for moves back to the upside. And look at this target I placed on. Now that target was based from, it was 1513. I remember when we laid that one out, And all I was going from, guys, was, okay, so number one, we had to take out this range, this region, because everybody who's been forcefully and wrongfully led in the opposite direction on gold without doing proper analysis, which we put forward, and not taking into consideration the importance of 1480 weekly, that they could have got trapped in all of these moves, forceful down moves. But as you can see, these are just traps, and the market's making and layering out higher lows in a sense, and throwing wicks to the downside. And what we've then seen is we've seen a blowout number one, blowout number two across here, blowout number three. We had 1504. Where did I pull out that from? That's currently. So that's the current market price, 1504, and at the minute what I am looking for is a continuation to the upside. However, look at the markings that I placed on last week. So we had the highs. I simply placed on the highs on the hourly, and I placed on the body there, the body high, and brought that across after the forceful push rejection. You can see liquidity is being let go of here, volumes coming back, and we had stops anywhere above here, stops anywhere above this lower swing high, and then stops anywhere above this prominent high, so into this region. So market is hunted out, so it's tried to trick people into going south, bearish, into the short, and then it's taken out layer one, layer two, and then layer three. So this cycle is more or less complete. So that's why I set, because I knew the psychology of the market and overall traders, that we have to look for on the lower time frames, the hourly and more or less the 30-minute that we're going to be going into soon, is where these strong peaks and valleys are, where you can see, okay, that's a prominent high. If the market is forcefully being pushed to the downside, if people are shorting in this space or anywhere off, these mini intraday lower highs, you have to think about where the stops are going to be. So obviously above here, here as well, maybe above this peak on the 30-minute, and then definitely above here. And look how the market is, boom, smash straight through that, and look at the volume that's being generated from here to here, and especially as we take out that level, it doesn't give you much time to for a trader to generally see that and then to start to move stops out the way. It's a very, very sudden movement, and this was what time was this? This was just US session start. So look, we got 13:30 to 15, so 1 to 3 p.m. half 1 to 3 p.m. US session, bang, we get this huge liquid move, consolidate, and then again we get the same thing. So we have three major drives here, 1, 2, and then 3. Price pulls back and reverses. Now this area, as you can see, the spike piercing through 1515, and then we more or less breach this level. So if I place my crosshair at the peak of 1517, translate this across, you can see that it's more or less killed. Stops here, stops here, stops here, and stops here, and the cycle's done its complete. 3 major pushes on the intraday. So that is why I set my target as 339 pips. Look at that risk reward. It's a risk reward of 1 to 6, 55 pip stop, 339 pip target. So what's next for me is to sit down and wait for market open, wait for price to come into my favor. So I'm expecting a pullback into 1500s. So anywhere, what my scope is for the week ahead is anywhere here. Okay, once I see market come into this region, this could be the Monday, Sunday evening, Monday, I know that this cycle can then start to come a lot higher, because again, over here on the left hand side of the daily and the 4 hourly, what we're looking for is, I wouldn't get too fooled into this bearish engulfing candle right here. It can provide a pullback and some short movement, maybe 50-60 pips or so, but what we're looking for, because of that weekly time frame and that weekly analysis, I'm looking for a move straight to the upside, and we're going back into 1550s for me. This is what I'm looking at, 1550, so it should be a pretty decent week. Right, that's that. What I'm going to go over now is the GBP USD move. I'm not going to do any analysis or breakdowns on GA. I'll save that till later on or the next video. I may catch up on USD CAD just quickly, just for educational purposes. And then what we're going to do is we're going to shed some layers off the chart. We're going to take some of the daily layers off here and here, because looking at this, it is a little bit congested, and some of you guys may be thinking that too. So what we're going to do is we're going to take the days off, and we're going to focus specifically more on some of the 4-hour levels, and make it a habit to always find the 4-hourlies in terms of the purple areas and the bodies. So for instance, if I go ahead and just for this exercise, take this off, take this off. So our weeklies are the main focus, and our 4-hourlies are. So take all of that off right there. Okay, so quick tune up, bring this across. 1, 2, 3, and across here, 4. 4-hourly across. Pretty well suited still, as you can see. That peak can be tested once more. And if I just expand the screen, sorry, so we don't have to squint. If I just expand the screen now, we have a little bit more clarity. We can see the pattern recognition here, which is happening. We can see the build-up in price. And we have 2 weeklies on there. And in terms of our 4-hourly, so we've cleaned up the chart a little. Now what I want to do is go in and just look at the most recent areas of value across here. So we have 1, 2, okay, so let's try this one first. And that's what price has more or less bumped its head from, and we're wedged in this gap right now. So with that being said, what I'm also going to do is I am going to ditch the hourly time frame and ditch the 15-minute time frame. A little bit of a plot twist here. And you guys can see how this will help us and to gain further clarity going forward. So over here, 30-minute, same. If you look at the last video, the same way we marked on the hourlies, we are going to do with the 30-minute, but it does require some slight adjustment. Here, these ones are fine. Taking it from the body into the high, they can stay, they can be mixed up. And then our main focus here on the 30-minute is going to be our entries. You'll see this going forward. So last week I just lined up an entry here. I showed you the entry on GBP USD. I'm going to get to that in a moment. And I'll show you that was a great success as well. It was a week of about 450 pips for me. And I didn't really put in too much effort last week. I was busy with other things and family. So here what we want to do is we want to drill into our heads this lineup, reading pure price action, going area to area, understanding why price is pulling back, understanding market psychology like I've just explained, but now we're going to go into further detail. So we've just shedded 2 time frames and come into the 30-minute, which gives us the best of both worlds, and we've just taken some of the daily areas of the daily levels off as well. So for me, again, these steps really do help, but as you get better and you can see things more consistently on the chart, you know, again, it's all about building the intuition going forward, and that's our aim into all of the other videos and the entire task into whenever, you know, into next year, year after, so on and so forth. So now that's a success. With that, in this case, I would journal this. Onto the journaling app, which I did recommend to everybody in one of the previous videos. Journal this successful trade, again halfway around here where my crosshair is, around about around 150 to 200 pips, anywhere around here, especially once you see this breakout. That would have been a good area to maybe take some off the trade management, bring stops past entry. But again, GBP USD was much more specific, whereas gold, that was just a lineup and a layout. But I'll go into you can see many entries here, especially on the 30-minute. So the 30-minute, if we just stick to this time frame and we dissect it to a very, very decent extent, very, very good quality, we're going to be finding many, many entries on here going forward, and it makes it easy for everybody to follow and align that thesis with exactly what we see over here on the left-hand side. So yeah, looking at gold, pullback, and then we're looking for the continuation there as well. If we go to GBP USD, interesting chart. Now it was the 4-hour time frame. It was the 4-hour time frame. I told you about the 1.3 handle being tapped into 1, 2, and 3. We had a huge run on GU, and we did need a release in price, which we did get. Over here, we lined the trade up on the hourly. Okay. Now we're on the 30-minute. Let me just jump back to the hourly for a second, just as a recap. So on the hour, guys, we had the high, and I placed this general intraday area, this intraday line at 1.3. Price tapped into that once more, but it didn't breach it. I also simply put an intraday level on the low at 1.29, 1.2894, dragged that across. And that was profit target 1. That was profit target 1. Overall scope for this was 181 pips. It did succeed, as you can see where the bodies are, spiked just below, and market is more or less hanging on to that area right there. Now, I went through the breakdown of the decent entry. I think we were 1 or 2 candles late, but still. Market came in, had a small little retracement, as it always will do. The candles which were printed in there, we can see weakness, 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 and then a breakdown. We've hit this area, and then we started to consolidate. So this area is quite important because the first drive, the first pullback on the 30-minute or an hourly time frame, it doesn't really matter which one we're working from. And then we can see the relief or the rally afterwards. That's the area of value in which we want to take note of, because the market can then retest that. It can use it as an equal low. Let's say this is use it as an equal low in this case. So we've gone from higher low into a higher high, which is a significant high. Significant high has now gone into a new low. Look how the market's breached this low. Okay, market's breached that low. Now, what we can then go ahead and decide is, okay, is the market going to come through, break that, give us a retest, whatever it may be, and completely break the structure, or is it going to retest the upside? And look how it's come back to retest upside afterwards, then give us the breakdown. So as long as we can spot these small areas in line with the overall markings that we place on the daily, the weekly, and the 4-hourly, we can catch moves like this and say, okay, cool, I can sense danger here, 1, 2, and then 3. Especially after this candle. Sense danger, we're at 2.9 as well. Look at when the crosshair is, 1.2900. It's fed back into that, so it's gone from 100 pips to 100 pips. We've gone from A to B, and it's gone from A to B once more thereafter. However, what I would like to just tell you guys and explain is, if you see danger, and look, remember our management, 50%, we want to take some profit off the table. It's better to take profit than to watch this happen, because this is where the emotions come in. if you're up, in this case, I say 80, 90 pips, you took nothing off the table, you didn't move your stop. If you see this in the matter of a few hours and you were once 80, 90 pips up, this is going to impact your mood for the day. It's going to impact the way you speak to people and just the way you run your day in general. And here you could start to be fearful because of the volatility and the volume that's coming through so close to your stop. And you also break even, you went profit to loss. And yeah, it can just drain your energy and it can lead to some emotional errors afterwards. So as we go along, you guys, you'll pick up on this stuff and you can apply it to your own trading. But overall, yes, we did come through and hit the next target. Now, for me, did I hold the entirety of 181 pips? No, I didn't on all of my positions. I opened various positions, and here I decided to take some off the table. Because of my P&L for the last few months, I did not bring my stop down. I knew that this had to come down eventually. So from significant high, lower swing, lower swing, lower swing, and then we have the breakdown across here. But I did take up 3 or 4 of my orders off, and I let the rest run. I didn't even close at the target level, at take profit level. I rarely set take profits on the broker, because I'm always monitoring, and I'm always in safe safe use of my risk parameters. So I'm actually still in the trade, I'm still in pound, and this is one that we can look at for the week ahead. So that's that there on the hourly. 30-minute, to give you guys a gist of the 30-minute. If we looked at this on the 30-minute time frame, okay, over here, I was somewhere around, I think it was here where I laid it out on the hourly. However, 30-minute time frame, what I'm going to get into is more or less dissecting the 30-minute a lot more than we did the hourly, because it's going to give us many more opportunities. So over here on the 30-minute, we had a huge volume pump and burst through 1.3, but we did breach this over here. Again, a huge volume pump and burst. We had a breach of that area, so we're on our, again, the market was doing drives, giving us drives. We had a lot more than 3 though in this case. 1, 2, 3, and then we actually got a 4th over here too. And then the price started to break down into the new week. I've simply just recognized 1.3 there, but price, again, once the price was back below, after these small breaches, there's many opportunities to short. So especially across here, boom. Once the market dipped back down there we go again, and then stops would be 3 to 5 pips above the previous high. A nice swing, as you can see right there, where we could have just simply layered on a mini counter trend line waiting for that breakdown too. And as you can see there, the price, the step up of price, 1, 2, 3, 4, I would say more or less 4 right there as an average, 5, 6, or 5 or 6 across there, sorry. You can see that, you can clearly see the steps on the 30-minute time frame a lot more and a lot clearer. So this would still remain valid, still remain straightforward as it was. Bringing that all the way across now, you can see the test. Okay, and you can see the warning signs earlier on. You can see the warning sign after the first drive and the first candle being pierced and penetrated into that level. Okay, price pulled back. You can see money, boom, zip, it's gone. The money's gone from A into B. Here again, price has made its decision. As you can see right here, this candlestick, there's a lot of things going on in the news. It was something came out at 10 a.m. And what we've seen was this wacky price behavior. We've gone into the highs, and then the market has then retraced its steps on this one candle in particular, where it's cleared out the previous wick, it's cleared out all of this retracement behavior, this pullback behavior, and then the market started to drift. Volumes died a little bit. We did get this sudden jump up. What time was this? This was 6:30 in the morning. So we've had London session come in. We've retraced through Asia into London. We've had the false spike before London open, and we had this cap right there. Boom, boom, boom. False spike back below. We've seen the retest there. As you can see, price action is simply just being pulled together around session times, and this there's entry opportunities everywhere. So here on the 30-minute, we have price dipping back below. So we have the false breakout London break. Price moves back below. It retests the area of the false break. As you can see right there, market pulls back, money's taken out, bearish engulfing, price dive. 2.9 into 2.780. It's pretty decent movement. So now, reading this chart, going forward, my point of call would be, okay, let's see how price reacts here. We have the upper boundaries across there, and what we could do, we could run back into that area and then take another dump into the lows. So I am holding my pound short. I'm going to take that off for now. I'm holding my pound short, but then this is just small ideas. We're looking at structure on the 30-minute time frame, and we're running it in alignment with the higher time frame. So let me just suggest and show you something. So we have this great piece on the right hand side. Let me take this away, because remember I did suggest that this area is a magnetized zone for GBP USD, and that's why I have the arrow going into that area. I'm going to keep that on for future reference, but just as I did with gold, I'm going to go ahead and take away the daily areas. All right, take away the daily areas. I'm just going to clean up this chart a little bit here. Okay, so everything's looking pretty good. It's looking pretty good, and I'm just focused on, again, coming into the 4-hourly. I'm looking at mainly plotting on my 4-hour areas, and then breaking down the 30-minute time frame on the right hand side for my entries. What I can see and what I can suggest going into the arrow is that, number one, see this here, 1, 2, That was a solid area. If you spotted that at an early rate, then good for you in a live market exercise, obviously. And what we can see here is 1, 2, bullish engulfing, pushing that area right up, and we've had the retest of that. I'll remove that. We've had the retest of that zone. Okay, boom, boom, 1, 2, 3. So we've gone from here into here, and as you can see, we've let go, we've released money here, we've dripped down, retest, retest, and now you can see we're actually trapped below that zone. So guys, as you can see just from the last video of just removing how and why, we're key hand picking certain areas and certain zones, and then again we refine it further and further. So the 4-hourly and the 30-minute, 4-hourly and the hourly work extremely well, but the 4-hourly and the 30-minute now are on lesson 13. This is what we're clearing into for all of the videos ahead. So over here, what I'm now expecting on sterling, if we just focus on this zone, is we have potential price breakdowns happening on the right hand screen. But what we can see that we've gone from this zone within 1.2950 and 1.2850. Okay, but now we broke down through 1.2850, the 4-hour region, but we have our weekly just below us. What I'm expecting pound to do is we could bump our head here once more. We could maybe breach it a little bit on the intraday. That's why the intraday sometimes it's great to read that and have our intraday markings on there as well as the 4-hourly, because anything we miss on the 4-hourly or these spikes that may go through, the spikes may form as beautiful price action setups over here on the 30-minute intraday chart. So we have the intra-week on the left, intraday on the right. So they have to work hand in hand. Now, we could do with a bump to maybe that area, and then boom, we're going to crash into our regions and zones, and move 1 across, move 2 across, and then we have our third. Okay, trying to keep that neat right there, and then we can also bring this area across right there. I'm actually going to go ahead and just delete these 4-hour arrows just to clean up the chart once more, and that's what we're looking at. What I'd also keep an eye on is this area, this base taken from the bodies there again. That will be the next. But you can see now we have significant high, lower swing high, price breakdown, and now we're looking for an extensive rollover. I do believe that these areas, especially here, due to stops being placed for buy orders, buy executions, and we're now looking for this to actually roll over to the downside and fulfill maybe from 2.8 into 2.6, maybe another 200 pips, another 200 pip release. But again, remember on the intraday time frames, you guys may know if you look at the higher time frames, daily and the 4-hourly, and you're like, okay, cool, this is supposed to happen, but you get some extremely insane volatile price behavior on the intraday, which could only be 40, 50 pips. You never expected it on the left-hand side chart. You never expected it on the 4-hourly, but this is where we can then take advantage of that as well into the lows. So crosshair, this area, okay, I'm going to copy and paste that over. Look, that's where it fits on the 30-minute time frame. The 30-minute time frame, we can see where we're going to get some clean execution, some clean behavior, and then we're going to take it into our higher time frame area right there. So you can see just by taking off the dailies, and now we have a nice solid structure and solid plan going forward, which we can build on. It's all about repetition now going forward, and hopefully some things are clearing up for you, and it's all about focusing on the fine details. And as you can see here, you can see where the price is moving perfectly to these areas, and the faster you spot it with training, the earlier you're going to see these trade setups. So gold's done, we have sterling done. So GA, let's just quickly cover GA into the coming week. Right, taking off. These areas are fine for the moment. That one is cool, that one's cool. I'm going to leave those on. Okay, bringing this across. I'm going to keep this one on because it's Yeah, it was a previous very, very significant high previously. Okay, so this is what we've got to now on the chart. Now, GA, let's bring this across a little bit more. So you don't have to be super OCD when you're bringing your levels and areas across. As you can see, it doesn't matter too much as long as you can see them and you can see it gives room for price to fall or rise into these areas. This one, that's great right there. Alright, so GA, what I'm going to do here is explain what's happened. Let's have a look at the day first. So the day we breached the weekly, but look at the weekly, how the price has come back below the week. Remember, we had the week on GA and pound where it was okay. It's either going to break and it's going to absolutely rally, or we're going to come back below and we're going to continue to play in these ranges. What we've done here on GA is we've come back below. So we went above, spiked to the support, spiked to the support, spiked to the support, and again body on support. Oh, we break support, we test as resistance right there. Look at that price action. Look how well that's came through. And we also have 8.9 there too, 1.8900. So we are below, but we are confused. Below and confused. So 4 hourly, we're going to get a lot of clarity from this. Now here we had a gap up and it was a bit messy. Consolidation. What I will go ahead and do though is I'm going to place an arrow. I'm going to place an arrow where these two bodies are. Okay? And just bring that across, just to give us more of a mid-range theme. Now you can see how clean and precise this chart is, and we can clearly read as what exactly is going on. So from the daily we can see that we've dipped back below our weekly. I've placed on the 4 hour arrow from the body, and you can see where we've reacted 1, 2, 3, 4 times there. Nice rejection, then we get a nice rollover. But now we're more or less stuck at this area, stuck on this level, and it's simply from the previous marking that we put together. What I'm expecting on GA for the week ahead is a tumble into range 1 and then maybe anywhere around here, to be fair, but from here to here it's still going to give us a successful trade. So 30-minute time frame, take this away, they were just examples from the previous weeks. I was expecting a rally into this area, then boom, a drop. Right, so I'm going to take this, I'm going to copy it, I'm going to paste it over here. So what I'm looking at on the 30-minute time frame is the market could open, it could give us one push anywhere to the weekly resistance, or better still, perhaps another test into this area. So these spikes, 1, 2, 3, and then 4, if you look at the price behavior, the price action, it's very, very choppy, it's quite messy on the 30-minute. To be honest, this was a very, very difficult week. That is a very concise and squeezed amount of volume and price. There's not too much liquidity here, it's building liquidity, and probably we are going to be expecting a very, very sudden move on this pair, and my bet is to the downside for the week ahead. We could, number one, over here on the intraday price action, intraday time frame, we could push up, okay, boom, and then we could start to fall to the downside. So what I would like to do is, if it does push to the upside, I would be looking for a spike rejection more so, or even a candlestick formation around here. Anything that more or less rejects secondary to this area, and then we're looking for a breach and back to the downside. There could be a breach, sorry, and then the price could start to breathe back below, and then we could start to roll over to the downside. Once price is cleanly cleared and maybe even retested back into this zone here, so the price on the 4 hourly could dive below, come back into test, pick up some volume and liquidity here, and then dive into the secondary region. So 8.7 into 8.550, we do have around 200, 230 pips to play with that in particular. Right, so if I go ahead, copy and paste, that's target area. So these, if we get the bias correct, so as you can see here, significant high, another lower swing, spike, we've gone into consolidation, and now we're looking for a drop maybe a retest and then a new lower high to be formed, and then the market to forcefully be led into our lower region, 1.8550. It's going to be really good for us to catch a high risk reward profile trade. So I can't lay anything out right now as such, but because there's two ways: it's either going to pull back or it's going to give us the clear break, and this is why we have to monitor both time frames very, very well. So I would wait again until US session on Monday. If we do start to get a pullback, okay, I'll be looking over here for this behavior. Erratic drives to the upside, look at that, right into 1.89. Erratic drives, and then boom, forcefully being pushed to the downside. Similarly to gold. So as you can see on gold last week, start of the week, we pushed to the downside, but the bias was upside. And again, as long as you have confidence and you put all of the elements together here on the higher time frames, if we work well with the 4 hour, translate that into the hourly, the 30-minute, then it's all good, it's all systems go. This is where the confidence comes in and how we can line up the risk reward. So we'll see how this one plays out in the few days to follow. Lastly, I just want to run over USD CAD because we're getting some decent movement over here on USD CAD at the moment. As you can see, this was the markup. Markup 1, 2, 3, and then 4. And look at how, again, just for, it's up to you guys if you do. I'm in a USD CAD trade and have been for a while. That's why I'm monitoring this, but it's completely up to you. Whatever currency pairs you would like to go in, but USD CAD is one that does follow suit quite well. So we've had PA, we jumped out of higher region, consolidation, classical for USD CAD is jumping from one range into another, ranging for a while, reversing and going in the original direction of the overall bias, which we actually put together pretty well on the weekly and the daily too. Daily was pretty decent, how we put that high going across. And we had spike 1, 2, 3, 4, and then this candle here took out 1, 2, 3, and 4. Momentum was made up, retest into that zone. So we were just breaking down, but to a very, very accurate degree. If you look at the PA and the behavior, we've gone from spike, not knowing really what it wanted to do, breakdown, retest in, and then we had a nice breakdown over there as well. Looking at the PA on the 30-minute, it's pretty decent. 30-minute price action, very well led. If I just quickly go into this, very well led. So over here, 4 hour, we had the break on the 4. Here it is on the 30-minute. Then coming into this was mid-US session. So US session break, consolidation, consolidated more or less until the next day. And then before the gap between London and US, we had a simple price spike to the upside. And as you can see there, we had the breakdown straight afterwards. So it depends how quick on the mark you could be. But if we just box off the high region of, okay, so we have the US session breakdown, US session recovery, secondary test come in, and then third test. So we're actually breaking down lower swing high, lower swing high, lower swing high, lower swing high, and then we break structure completely. But as you can see over here on the right, look at how the markets pull back into the region, and that's the manifestation of it here. Finding its feet for a while, okay, find its feet for a while, but we drove back into that area. Now this is what I mean by a nice spike 4 hourly combined with a nice spike hourly. 1, 2, you see that? Close of that candle, okay, get ready for a rollover and a reverse, and look for the same clues and the patterns over here on the 30-minute time frame. This is where you're going to find the best risk reward trades and the highest probability entries. Over here, looking at, okay, so I put the 4 hour lows on, served as a base, but you can see price is starting to break down slowly, bearish engulfing, taking that straight out, which is here, and even here as well. You could even go in and go, okay, cool, start the session. When was this breakdown? This was 6:30 in the morning, getting ready for London. Nice, solid move to the downside where we've gone from structural break, so we've gone from range break, structure retest on the liquidity hunt, if you will, and here we've got the breakdown, and we've gone back into the lower boundary. And look at how the market has tested this 1, 2, 3, 4, 5, 6 times. It's remained below. Can you see that? It's remained below completely, exclusively, and this is the manifestation of that right there. Coming in, boom, price breakdown, and the behavior is just slacking and lagging. It has been on the intraday time frame, but look where it's headed into. It's headed into this region right here, and I'm expecting a break and just a push through, as suggested on some of the earlier videos and content. So for me now, I do have a scope of USD CAD melting, but we can take out this region and pop back above and then play within this range as well. So just explaining that there on the 4 hourly, quickly going into the day. So we had the price break on the day, retest into that zone, bearish engulfing, bringing it back back down. We had the doji, dragonfly doji retesting that area, and then we had the boom, the breakdown afterwards. But we can clearly tell, and we can paint a picture, can't we, as to exactly what's happening on these time frames. Breakthrough, retest, consolidation, drop, and drip and drab. And I'm just looking at this, looking for this, to actually take that area clean out, and that trade setup more or less will be over. Then we'll follow price behavior to see, give it a rest, because price behavior could be a little bit erratic after piercing here. So we've gone from A to B, A to B, A to B, and zones and areas are just being fulfilled across the board. So I hope that helps. So in the next video, I've laid out what can potentially happen on GBP USD, what we're looking for on gold as well, and GA is looking pretty solid for a downside move. So going forward, guys, we've just stripped off the dailies. We're going to be focusing more on the intra-week areas with that. We're simplifying things going forward now. So if you've had a little bit of a foggy head with the charts looking a little bit like, it's too much on there, what do I use, the hourly or the 15-minute? We've just cut that into 2, and then going forward over the next few videos, we're going to start to really put things into place, and it's just a memory game and down to repetition, persistence, and dedication.